Thank you guys so much for tuning in. Sorry about that, I was on the call. But welcome in. Today is May 12th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So we don't really have much. I mean, the one thing that I am seeing here is the federal budget balance, and it seems that we have a surplus. So we actually made more than what we spent. This could be due to Doge, who knows? But yeah, we don't really have anything that's significant here. Tomorrow, I would say, is when we actually do get something significant, right? We have core CPI tomorrow at 7:30 Central Time, and yeah, let's see. And I think that's pretty much it for the economic calendar here. Oh, one thing I do want to mention is that the United States and China did come to I want to say it's a trade agreement, but it is a revision of, I guess, the trade policies. So yeah, as you guys can see here, U.S. and China agreed to major tariff rollbacks. So I believe, Chinese goods is going to only be taxed like in total 30%, and United States good is only going to be tariffed 10%. And the markets reacted to this pretty bullishly, quite actually. We opened up here on Sunday and we moved about, I believe it was like 220 points here, 230 points here on NQ. And then coming into the morning, we expanded another 620 points. So in total, I think we moved about maybe 850 points. But yeah, I mean, we had some bullish news, bullish reaction to the markets. And coming into this week, on the weekly time frame, this was the weekly candle, right there. And based off of that weekly candle, my assumption was coming into this week was that we're probably going to take out the previous week's high. It's just, I say probably because the daily time frame isn't quite suggesting higher prices, right? This was Friday's candle, and Friday's candle was, we pretty much consolidated the whole day on Friday. And with the way that we closed on Friday, it doesn't necessarily align with the weekly time frame. So the daily isn't aligned with the weekly. So I was a little bit hesitant on declaring higher prices on Monday, but I did want to see prices take out previous week's high sometime this week. But whenever we opened up on Sunday, that completely changed, and we actually gapped up and took out previous week's high. And so coming into this week now and coming into today, I don't necessarily have a objective on the daily time frame and the weekly time frame. I'm just going to have to rely on maybe the intraday time frames, such as the 4-hour, the 6-hour, the 10-hour, or the 8-hour time frame. One of those time frames will provide me with a bias, because every single candle has an objective, right? Like how this candle is going to close on the 4-hour time frame, how this 8-hour candle is going to close. Every single candle has an objective, has a specific kind of idea of where prices wants to go. And yeah, so one thing I do want to mention here is that we actually have a market structure shift here on the weekly time frame on NQ and ES. So this is ES here. And we took out both the weekly, this weekly market structure shift on NQ and ES, and we also took out the previous month's high. Knowing that we did this means that there is no SMT divergence between the indices, right? Because there's a lack of SMT, that means on both of these indices, we should continue to expand higher and continue to seek higher prices. And yeah, I mean, I'm gonna rely on that specific idea coming into this week, right? Because of the lack of SMT. So I'm just gonna keep assuming that we're going to seek for higher prices. So yeah, coming into this week, I'm bullish. Just not quite yet, like, know where we are going to go. I'm just gonna take it at a day-by-day basis. And yeah, so coming into this morning, I'm just gonna rely on, how the 4-hour candle is gonna close. So depending on how the 4-hour candle closes, how the hourly candle closes and the 4-hour candle close will give me my morning objective. But yeah, hopefully that gave you guys a really good rundown of where I want to see prices go, what my bias is, and what I'm more inclined to take. The deal goes much further than investors thought possible. They also liked that it showed Treasury Secretary Scott Bessent in control of trade policy. Yeah, I mean, the markets do not like tariffs, but they do like, whenever we do come out with any news or policies that doesn't really support tariffs. And with the easing of how much tariff there will be, the markets took a liking to that and really showed it coming into today and this morning, right? That 850 point expansion is just like, that's a lot of move. That's a lot of points. Market structure shift really is one of the key drivers for me right now. I like seeing market structure shifts because it suggests a shift in momentum, right? A shift in direction, in the longer term direction at least. About 4 minutes left until the closure of the 4-hour candle. Just waiting patiently for how we close here. But I'm really liking the closure right now. It's happened to a chess game before. Is that the right move? I'm not too sure. I mean, I like the idea though. Am I allowed to do this? I'm not too sure. He takes, I take, he takes, I take. I want to kick out this knight. This knight's what? Am I? There's the 10-hour open, and with the way that we closed, it appears that we're most likely going to take out this hourly low and the 4-hour low. And because the hourly low is the same low as the 4-hour low, I am actually anticipating that we are most likely going to take out the 4-hour objective within the next hour here. So let's see. Yeah, I want to see us take out the 4-hour low. So let me just draw a line right there. Make it red. So that's my draw of liquidity. For me at least. You can't really go anywhere besides like maybe. I think I just gotta worry about the time, but take control of the center. Okay, I'm like for sure winning here. Yeah, bye ma. Does he just want to trade here? I don't know if that's the right move, but we can continue to trade, bro. Bye, ma. I don't think he wants to be trading right now. Oh my gosh, I take that. What? Wow. Sorry, I was intense. That was... Wow. Alright, well, as you guys can see a little bit, so this is like a story tell, right? So let's take a look at the 4-hour candle here. The 4-hour candle suggests that we're most likely, this candle right here, by the way, the way that this candle closed on the 4-hour time frame suggests to me that we're most likely going to take out the 4-hour low. And after we take out, or well, that's just on the 4 hour time frame, right? So the 4 hour time frame is suggesting lower prices. Let's go into the 1 hour time frame. 1 hour time frame also is suggesting the same idea. This hourly candle has the same low as the 4 hour low. So for me, I'm anticipating lower prices for the next hour, and I want to see us complete the 4 hour objective within the next hour, because the 1 hour low is the same low as the 4 hour low. Let's zoom in just a little bit more. So going from the 4 hour to the 1 hour, I am now going on to the 30-minute. And what does that 30-minute time frame tell me? Well, this 30-minute candle here is suggesting to me that we're most likely going to take out this 30-minute low. And the 30-minute low is the same low as the hourly low slash 4 hour low. So what does that mean? That means we should complete the 4 hour objective within the next 30 minutes. Because I'm continuing to zoom in and notice that, like, hey, this 30-minute candle here, with the way that we closed, suggests lower prices. Not only that, but it's a low. The 30-minute low is the same low as the 4 hour low. This idea is called scope. It allows you to understand when prices should complete a specific objective. So let's go into the 50-minute time frame here. And this is the 30-minute candle. Or not 30-minute, but 50-minute candle. And with the way that this 50-minute candle closed, right, it doesn't have the same low as the 4 hour low. So notice how there's a purple line, a red line. So that means there's two different lows. And with the way that this 50-minute candle closed, we could retrace back into this inefficiency here. What I'm going to do is I'm actually going to wait and see how this 50-minute candle closes, or I'm just going to continue to wait until a 50-minute candle closes for a alignment, right? I'm waiting for the 50-minute model to align with the higher time frame objective, which for me right now is lower prices. I want to see prices take out that red line. The red line would be my morning objective. So I'm just going to be patient. I'm just going to wait until a model shows itself. I do have an objective right now, right? And I'm just going to reiterate it again. I want to see prices take out the 4 hour low, which should be completed within the next 30 minutes. So we should take out the 4 hour low within the next 30 minutes. And going into the trade journal here for today. All right, so coming into this week and some of the pros and cons from this week, or I guess pros and cons from last week that I'm going to carry on to this week. The first thing is to take consistent trades, right? I want to be taking trades where all three of my components, all three of the traits that I look in a trade are present. So I want a higher time frame objective, right? So in this case, in this morning here, I have a higher time frame objective. I have an idea of where prices wants to go, and that is to retrace back, or not retrace back, but to take out the 4 hour low. And after we take out the 4 hour low, that really doesn't concern me. All I'm concerned about is right now is if we can close and really show alignment between the lower time frames and the higher time frames right now. The higher time frame is suggesting lower prices. Now all I'm waiting for is a lower time frame model to align itself with the 4-hour time frame. So that's kind of like the two criterias that I look for in a trade. The last one is an entry pattern. And an entry pattern is essentially like a fair value gap that I can enter off of on the even lower time frames that supports the idea of my model in my higher time frame objectives order flow. So today I want to see a CB, I want to see a fair value gap that supports lower prices. Second pro here is to align my model with the higher time frame objective. So I'm going to state it again. If I'm able to align the lower time frames with the higher time frames, that means I have a really good understanding of what the order flow is, and I have more confluence and more confidence of lower prices or higher prices, right? If my model can align itself with the specific objective, then I have a more of a reason to see lower prices or higher prices, right? And there are two higher time frames objectives that I look for, which is either an expansion model or an equilibrium model. And the last pro here from last week is I was actually able to utilize a time stop. So a time stop is a little bit different compared to a price stop, as a price stop is essentially a stop loss order set at a specific price, because according to your strategy, prices shouldn't get past this specific level, right? And the time stop it works in a very similar way, but I don't have a set price on it. I have a set time, a set amount of time that an objective should be completed, right? So for me, I know that this 4-hour objective here, with the way that this 4-hour candle closed, I will give it up to a maximum of 4 hours to complete, right? And let's just say there's a bearish 15-minute candle here, and now I'm able to really take a trade. Well, the amount of time that I will allow that trade to run for is 15 minutes. After 15 minutes, I'm going to move my stops to break even. And after that, if we get stopped out at break even, that's completely fine to me. I like to see strength and really aggressive, fast delivery towards my objective. I don't want to be sitting in a trade where it's just going back and forth, or it just takes a mental toll, and there's a specific reasoning on why there's that time stop, right? And it all comes down to how long did it take for this candle to be formed? Well, if this candle took 15 minutes to be formed and the objective is telling me that we should take out that 15-minute low, then I should only give it 15 minutes to take out the 15-minute low. And so that's some of the pros and cons. So taking consistent trades, being able to align my model with the higher time frame objective, and utilizing time stops. What I can continue to work on here coming into this week is, I'm still trying to actually learn how to fundamentally break down a company and really analyze its data. And one way that I'm doing this is by creating really basic discounted cash flow models for myself, right? Two things that I can work on here is the cost of debt, meaning how much does it cost to incur this amount of debt, right? I'm going to do interest expense divided by total debt. I think that's one formula that you could use for cost of debt. I think there's probably more, but this is the most simple way to find cost of debt based off of its financial statements. And I really do want to get a firm grasp of a net working capital concept, right? So a increase in assets is only going to increase net working capital. And if net working capital gets increased, then that means the change in, that means I'm going to actually, if there's an increase in net working capital, that means I have to use more cash to support the increase in assets. So it's actually going to be an outflow that is taken away from my free cash flow. Start recording accounts receivable, accounts payable, and inventory from. And the second thing here coming into this week that I can learn is learning about multiples and how to compare different PE ratios and other ratios like that to different companies, and how to really interpret that. A really good baseline for me right now is that I have to understand that different industries have different PE ratios and different ratios in general, right? If I were to compare Walmart to Nvidia and look at its PE ratios, its turnover ratios, and liquidity ratios, it makes no sense because they're in two complete different industries. One is in the wholesalers, retailers, sort of end of the spectrum, and Nvidia is a tech and chip company, and it just doesn't make sense to compare the ratios. So that's a really good baseline. And to sum everything up, some improvements here for this week is, first, to take consistent trades. This will always be my number one value when it comes to trading, right? I always want to be able to take a trade where I can explain to anybody the reasoning behind it. The three components that I look for within a trade, and to really be able to break it down in a way where they can understand that, oh, that makes sense, Second, utilizing time stops to understand the concept of how much time it took a model to be created and how much time it should take for that model's objective to be completed. If your model took 15 minutes to create, right? If it took 15 minutes to create this candle, then you should only allow 15 minutes for that specific model's objective to be completed. So utilizing time stops. Second, align your model with the higher time frame order flow. Like today, coming into this morning, I'm not going to necessarily seek any bullish models as of right now, because the 30-minute time frame, this 30-minute candle here, is suggesting to me that we're most likely going to take out the 4-hour low. So why would I position myself in bullish conditions? I'm just going to wait until maybe the 15-minute time frame, whatever low time frames, aligns with the bearish order flow on the 30-minute, hourly, and the 4-hour. And that's pretty much going to be all for today. Or I guess for the pros and cons. I do want to review one trade here with you guys because I believe it's just going to really benefit me, and it's going to allow me to really understand where and how to implement specific higher time frame objectives. And yeah, so the trade that I took last week was actually based off of how this 30-minute candle closed. So this 30-minute candle here, right, with the way that we closed, the easiest assumption that you can make is that we're most likely going to take out the 30-minute low. And so coming into the next 30 minutes, my bias is that, hey, I want to see prices take out this 30-minute low. And so for the next 30 minutes, I'm going to look for any bearish candle that's suggests lower prices on any lower time frames relative to the 30-minute time frame. So going from the 30-minute time frame, I notice, hey, this 15-minute candle here, right here, so where this little comment box is pointing towards, it closed bearish. And it suggests that it should take out this 15-minute low. And so now I have a structure. I have some sort of framework to work with here. So the understanding for this trade is that we should take out the 15-minute low. After taking out the 15-minute low, we should expand towards the 30-minute low, right? And so I have a model, I have a higher time frame objective. So now all I look for is some sort of entry pattern. And going into the 5-minute time frame, I notice, hey, this 5-minute time frame, there's a 5-minute fair value gap, and this fair value gap supports lower prices. So if we do trade up into this inefficiency, we should respect it. We should take out the 15-minute low. After taking out the 15-minute low, we should take out and expand towards the 30-minute low. And notice how there's a dealing range between this swing high, this 15-minute swing high here, and this 15-minute swing low. It suggests to me that we're most likely going to retrace back into the discount of this 15-minute dealing range. And discount is essentially a area in price where prices is cheaper, is in the discount compared to its fair price. So if you're a buyer, you want to be a buyer in this green shaded box here. And it makes sense for prices to trade into here, right? It hasn't had the chance to trade into equilibrium yet. So that's another confluence why I want to see lower prices. And so zooming into the 1-minute time frame here, guys, you guys can notice that, hey, we trade up into this fair value gap, 5-minute fair value gap. We respect it, and then we slowly begin to drift off lower. And from the amount of time that it took for us to go from up here to here, 15 minutes has passed. So what did I say about utilizing a time stop? So because 15 minutes has passed, I moved my stops to break even at 12:45, which is on this candle right here. So my stop loss is now at break even. And we eventually took out the 15-minute low and the 30-minute low. And yeah, very simple trade. The 3 things that I would recommend, or like the 3 things that you should take away from this, is that alignment, right? I aligned the 30-minute order flow with the 15-minute order flow. Second, having a fair value gap to enter off of that supports lower prices. And the third is utilizing that time stop, right? Understanding how much time you should allow a trade to run for depends on your model. And with that, I think that's going to be all for today. Like I said, I'm just going to continue to wait until this lower time frames aligns with the 4-hour order flow. But yeah, as of right now, that's going to be all for me. Thank you guys so much for